As 2026 comes into focus, a subtle but meaningful shift is taking place in how global investors talk about Iraq, and it is very different from the conversations of the past. For many years, Iraq was discussed mainly in terms of recovery, risk, and uncertainty, but today the tone is gradually changing toward long-term observation and strategic patience. Investors are not reacting to sudden headlines or short-term excitement. Instead, they are studying patterns that usually appear before major economic turning points. The Iraqi dinar has become part of this discussion because currencies often reflect deeper structural movements, long before they are fully visible. What is drawing attention now is not speculation, but the quiet alignment of factors such as improving financial discipline, more consistent economic messaging, and a growing sense of institutional direction. Global investors, especially large funds and long-horizon players, tend to move early and silently, positioning themselves when change is still forming rather than when it becomes obvious. Iraq fits this stage perfectly, still underestimated by many, yet increasingly monitored by those who specialize in emerging and frontier markets. In a world where traditional markets are crowded and heavily priced, investors naturally begin looking for places where transformation is gradual but real. Iraq's story entering 2026 is not being written in dramatic announcements, but in steady signals that suggest endurance, potential, and patience. These early signals do not guarantee outcomes, but they do explain why Iraq is now appearing more frequently in serious financial discussions. For observers who understand market cycles, this phase is often the most important one, because it represents the moment when attention begins to shift quietly, long before broader public awareness follows. One of the strongest reasons global investors are paying closer attention to Iraq is the gradual strengthening of financial structure and economic coordination taking place behind the scenes. Rather than relying on sudden policy shocks or aggressive announcements, Iraq's recent approach has emphasized control, discipline, and continuity, qualities that matter deeply to serious long-term capital. Investors who manage large portfolios are less interested in fast-growth stories and more focused on whether an economy can sustain stability under pressure. In this context, Iraq's efforts toward clearer monetary management, improved oversight, and more predictable financial signaling stand out. These developments may seem technical or slow to the public, but to global investors they represent maturity. When institutions begin to function with alignment instead of fragmentation, risk models start to change. The Iraqi dinar, as a reflection of the broader economic environment, becomes part of that recalculation. Investors are not expecting instant results. Instead, they are evaluating whether the foundation being built today can support future confidence. In global finance, consistency often matters more than ambition, and Iraq's recent signals suggest a move away from volatility toward control. This shift reduces uncertainty, and reduced uncertainty is one of the most valuable currencies in the investment world. As Iraq continues refining how fiscal and monetary elements interact, it sends a message that the system is learning, adapting, and stabilizing. These are exactly the conditions that cause investors to watch quietly, reassess assumptions, and begin preparing for possibilities that may unfold over time rather than overnight. Energy remains an essential cornerstone of Iraq's economic relevance and substantial influence on international trade, but what global investors are closely observing and focusing on now goes far beyond mere oil volumes or prominent export figures. The objective now lies in understanding how the various energy revenues are efficiently managed, harmoniously integrated, and then transformed into long-term economic resilience for a sustainable future. Throughout the decades, resource-endowed nations have consistently proven that income alone is not sufficient to establish economic stability. Governments and institutions play a crucial role in developing successful systems. Investors are, therefore, extremely meticulous in observing whether the revenue management processes are being conducted with greater levels of transparency, discipline, and strategic intent. In Iraq, There are gradually emerging signs that energy-related income is becoming increasingly intertwined with broader, long-term planning than merely being driven by short-term consumption patterns. These subtle changes matter greatly, as they significantly impact how an entire economy's risk profile evolves. Investors thoroughly study these complex patterns, as they are well aware that currencies tend to react not directly to earnings, but to how effectively those revenues are absorbed and structured. The Iraqi dinar, in this sense, is perceived as a long-term reflection of whether the economic inputs are effectively converted into a sustainable foundation. Moreover, another non-negligible, critical aspect is the growing importance of diversification. Although coal remains the dominant energy source, investors are attentively observing for any subtle shifts or improvement in non-energy sectors, trade harmonization, and fostering domestic financial development. These adaptive changes are generally not dramatic, but they are undeniably vital. Markets appreciate and reward economies that actively reduce dependency risks, even if those changes occur at a gradual pace. For the global capital market, the crucial question is not whether Iraq will undergo a complete transformation overnight, but whether it is demonstrating the discipline and capability to evolve continuously and step by step. When effective revenue management and integrated long-term planning extend beyond mere short-term objectives, confidence can begin to be fostered quietly and subtly. In summary, energy remains a fundamental cornerstone for Iraq's relevance in the world's trade scene, but the importance factor is now shifting towards understanding how revenues from various fields are managed, integrated, and transformed into long-term economic resilience. As a result, global investors are increasingly examining methods that ensure long-term economic stability, sustainable growth, and strong economic growth, rather than merely focusing on the oil exports or export figures. Another crucial reason why Iraq is attracting increased attention from global investors is its strategic positioning within a rapidly changing global financial landscape. As traditional financial markets become increasingly saturated and heavily leveraged, large investors are actively searching for regions that offer long-term optionality rather than merely short-term performance. Iraq stands out as a unique strategic position, geographically connecting major regions and economies globally, economically interwoven with global energy flows, and increasingly participating and engaged in international financial systems. For investors with long-term perspectives, this unique strategic context creates real interest even in the absence of dramatic headlines or active news. They are evaluating the alignment and how policy direction, regional cooperation, and various behavioral aspects interact and evolve over time. When multiple indicators begin pointing in a cooperative direction, rather than a conflictive one, risk perception gradually changes and becomes more positive. The Iraqi dinar, or currency of Iraq, naturally becomes an integral part of that broader evaluation process, not as a purely speculative or short-term instrument, but as a clear signal of how the system is able to absorb and cope with external pressures. Investors are also closely monitoring how Iraq manages and navigates the complex global environment, rising interest rates, shifting trade routes, and unpredictable regional balances. Stability during uncertain and unpredictable times often holds more importance than rapid growth during periods of peace. If an economy can effectively maintain direction and manage its transition while dealing with global instability, resulting confidence increases significantly. This is precisely why serious capital tends to observe and remain tranquil, collecting relevant data rather than making excessive noise or contributing to escalating tensions. Iraq's role in this rapidly evolving global environment is not primarily about achieving short-term advantage, but rather about developing a strategic relevance and lasting relevance that it can capitalize on over time. As global financial patterns continue to evolve, and investors become increasingly aware of overlooked markets that can become important over time, Iraq's ability to maintain balance and adaptability while dealing with external changes has become a key reason for its continued presence on watch lists, not primarily as a basis for rapid and immediate action, but for future positioning as conditions align more clearly and seamlessly. In the end, the reason global investors are continually watching Iraq in the coming years as it approaches is not fueled by excitement or bold, sweeping promises, but rather by a gentle, gradually developing momentum. Financial history consistently demonstrates that the most profound shifts in direction are far from sensational. They develop primarily through patience, discipline, and the strengthening of credibility over time. Iraq's current phase paints a vivid example of this progression. The Iraqi dinar is being observed and evaluated, not merely as a short-term opportunity, but as a crucial long-term indicator of whether solid and ongoing structural progress is continuing to hold. Investors are coming to recognize that the process of transformation is a continuous journey, not a sudden event, and they measure progress by the measure of consistency rather than the race for speed. What makes this particular moment so significant is that attention is growing increasingly before obvious outcomes become apparent, which is frequently how serious capital behaves. Instead of reacting hastily when outcomes are uncertain, investors patiently position themselves to understand the direction and performance of Iraq's economy as it evolves. By doing so, they pay close attention to behavior related to governance, economic signals, and the direction of Iraqi dinar's presence in global financial discussions, all of which are slowly unfolding as Iraq moves closer to a stable future. As global markets continue to grapple with uncertainty and overheating, those who demonstrate a genuine openness to learning, readjustment, and resilience will naturally stand out as leading economies. The Iraqi dinar narrative which takes off in the coming years is, therefore, less about bold, far-fetched predictions, and more about fostering awareness. For those who study and analyze financial markets diligently, this period represents the stage where growing confidence is slowly tested and developed. Whether outcomes intensify or remain steady, Iraq's increasing presence and influence in the important discussions surrounding global investments reveals that it is no longer being ignored. And in the dynamic world of global investing, the mere presence of attention itself is generally the first inkling that something significant and transformative is developing beneath the surface.